Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after Friday's disappointing non-farm payrolls report, the US dollar, which measures the greenback strength against a basket of 6 major currencies, took a further slide and now focuses on the support level around 91.70 to 92 figure. It is assessed as the market now prepares it for the Reserve Bank of Australia's September policy meeting. All eyes it will be on the statement. In the previous meeting in August, the central bank said it was watching both the housing and mortgage markets closely, but decided to leave the prime rate intact at a historic low at 0.1% and no change to its QE tapering stance. This is where the market will be keeping a close watch to see if there's any change in the language or on the tapering stance, as the US has actually indicated by many Fed members that they are now looking to maybe pare back the tapering, and this could actually flow on to Australia. So keep an eye at 2:30 tomorrow on Tuesday when the RBA meet and release their statement. For now, the technical implications look for a possible pullback. But as long as 74 cents is intact, then we could see another upside attempt at 74.65. However, with the RSI buckling, all eyes will be on this support level at 74. A break beneath there from a New York close, and New York is in absence of its long weekend for Labor Day. So all eyes will be seeing how the US dollar performs into Tuesday. Nevertheless, a close under 74 cents would give further indication to 73.60. Looking at the euro, the market is now focusing on the level around 119.30-35 after we see a clear rejection from that point on Friday. As I mentioned, the markets will be looking very much closely to the US dollar and also to the ECB, or the European Central Bank, this week, who are likely to suspend potentially the monetary policy at their meeting on September the 9th. Hawkish members of the European Central Bank's Policy-Making Governing Council came out last week warning that the Eurozone monetary policy will need to be tightened. So there is a little bit of a central bank talk of pulling back some of their tapering. So let's see what comes out of that meeting. No doubt we'll see a little bit of whippiness, but as long as we maintain under 119.30-35, then I do anticipate a pullback to 118.35 and reassess. Well, after numerous attempts on the top side for dollar yen, the resistance is still holding in around 110.2025 after a spike there recently, which posted a high of 40. With the technicals slightly firming up into the start of this week, could see another test of that top side resistance around 110.25, but unlikely to sustain as previously seen. There's good supply there and likely to continue. Well, with sterling clearing the level of 138.20, the resistance is all eyes, that is, at 138.80. We did see a brief challenge there Friday, but was rejected. And if this pattern does buckle further, then a move under 137.90 could give further slide to 137.70 and reassess. That could mean that sterling yen's upside test at the moment could buckle as it gets closer towards 152.30.40. Although the support level seen at 151.70 was resistance, now a break under there will give further guidance down towards 151.20.30. Well, as the dollar weakened, gold finally reaches its target of 1,830.35 on Friday, but was rejected, like previously seen back here in July. Although the market does feel a little bit short, and what I mean by that is that when the market got that flash crash, all the long positions were taken out. But now the market's pushing higher and higher. The market's been selling into this rally. And what I mean by short is the fact is market could be putting stop losses above the level around 1,830.35. If we close above there, then that could give a bullish bias and ignite a move up towards 1,850 to 70 area. That's why I'm a little bit cautious as this top side of the range, because the technicals overall are still holding to a positive stance since some free rejections from that midway point. Until we get a break at 1,810, the bias may hold to the upside. Oil, meanwhile, has backed away from the resistance of $70. After two attempts there, one being Friday's, backed away. and now looking back towards the support region around 66.5. This all came out around after the weekend, after state oil giant Saudi Aramco sent out a statement on the Sunday to cut October official selling prices for all crude grades sold to Asia. It is the biggest buying region by far, and by at least $1 a barrel. The price cuts were larger than expected, according to news sources. And also, the Baker Hughes report came out and said that the oil rigs fell by 11 to 497 in the week of September 3rd. So let's see if the bearishness continues since the rejection of that topside. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the new week.